Welcome to EWA's FIN-LYT podcast. EWA is a fee-only RIA based out of Pittsburgh, Pennsylvania. We hope all listeners of this podcast will benefit as we deep dive into complex financial topics that we will make simplified for you. And we hope that this really serves as a catalyst so that you can make the best financial planning decisions for your family and also save time. Thanks for joining, everyone. Today, we're talking about 10 tips to put your financial plan on a great track for 2024. Every year, the IRS adjusts their limits with inflation. And so we're going to talk through the limits that have changed and how you can take advantage of these. So first thing first is 401ks. There's a couple parts that go into it, what's called a 402G limit and then what's called a 415C limit. So Jameson, you give the 402G. How has this changed and what are the options there? And then I'll go on the total bucket of the 415C limit. 402G
is what most people are familiar with. That's your salary deferral. So 2023, $22,500. 2024, if you're under the age of 50, is an increase by $500 will be $23,000. If you're over the age of 50, you get a $7,500 catch-up.
Which didn't change.
Yeah, it's the same. So basically you get an extra $500 to put in. And that can be Roth or pre-tax.
So,
that's your deferral from your salary.
So make sure you go in, you're putting an extra $41 and change per month into your 401k plan, whether that's Roth or pre-tax. Now the big change happened to the 415C limit. So the 415C limit, when you put into a 401k, most people think, can I only put in that, 2024, that $23,000. Some people think the match is part of it. It's not part of that. $23,000 is your money you can put in. You get a match, let's say 3% if your income's, 300 grand, that's $9,000. And then above and beyond that, you can go all the way up to $66,000 in 2023 if there's an after-tax option, which then is the mega backdoor Roth because you convert that to a Roth. But in 2024, the total bucket is going to $69,000 a year. So if you think about your 401k as a giant bucket, but just a couple compartments in it, like one bucket you put in with water, the second, let's say that's your Roth money. The second is Gatorade. Let's say that's the match. Then the third is a profit sharing your company is. Maybe that's cranberry juice, I don't know. And then the fourth thing is the after tax, which you can put in, which whatever those total four compartments as a whole bucket, if structured properly, you can get $69,000 per year if you're under 50 into your 401k plan. If you're over 50, quick math, you can do $76,500 into your 401k in 2024. This is asset protected. It's tax efficient. The Roth money obviously grows. It's tax free after it's been in there 5 years. After retirement, if you convert it to a Roth IRA, after 5 years, you can get it out totally tax free, penalty free, no income taxes on the growth moving forward. Incredible. We recommend take advantage of these limits if your cash flow allows. Make sure you're maximizing not only the traditional salary deferral in your 401k, but also the total bucket if your cash flow allows. So
water, cranberry juice,
Gatorade,
and maybe like a seltzer water. Maybe a good mocktail.
The fourth compartment after taxes is seltzer water,
just to get a little bit of carbonation. Yeah,
keep the calories down. Yeah. Gatorade Zero too. I used so.
Yeah. Anyway, we went into great detail in our Mega Backdoor Roth podcast and how this.
Reference
works,
the Mega Backdoor Roth. We go into great detail how that works. So there's two different universes in retirement accounts. There's the 401k universe, 403b universe. Those are all in the same. From how much you can put in. 401k just is tied to your employer. 403b means you work in a non-for-profit. 401k means you work for a for-profit. Well, there's this totally separate universe that exists that's not tied to your employer, and that's why it's called IRA, which stands for Individual Retirement Account. An individual retirement account you can have on top of your 401k. There are income limitations. However, the big thing is for Roth IRA in 2023, you could put in $6,500. That also is going up $500, which is actually a big increase. I mean, that's almost an 8% increase. And that's going up to $7,000 a year. So and that's under the age of 50. If you're over age 50, you can put up to $8,000 per year with the $1,000 catch up. So there are income limitations. Most of our clients are above this. So if you don't have aggregation and you don't have any traditional IRA money out there, you can do what's called a backdoor Roth IRA. You put it into a traditional IRA first, you forego the tax deduction, you've converted to Roth, fill that out on Form 8606 on your tax return, and boom, you have money completely legally inside of a Roth IRA despite being above the income limits to get it in. So James said, any difference, a traditional IRA, we'll just hit on this real quick. Is there any difference in what someone could do in a traditional IRA versus a Roth IRA, which if your income is low enough, you could technically take the tax deduction?
From a contribution standpoint, no, it went up to $7,000 catch up if you're over the age of 50. So.
Okay, awesome. So that's tip number 3. Tip number 4, this is really super important for high income earners. So let's say you're a surgeon making $500,000 at a hospital with a 3% match. Does that mean you're getting 3% of 500,000 or 15,000 of a match, or how does that work?
No, it's only on a portion of your income, which is the technical term is the maximum includable compensation limit. 2023 was 330,000. So what that means is if you make $500,000 a year, your employer is only matching on your first $330,000 of income. 2024, that's going up to $345,000.
Okay, awesome. Okay, so here's the bad news, something you should be aware of. Social Security taxes limits are going up from $160,200 up to $168,000. That means, let's say hypothetically, you're that $500,000 surgeon. Hypothetically, every January your paycheck goes down. Why? Because 6.2% Social Security tax hits you until you've earned $160,200 for the year, where that limit's going up to $168,000, so the government can get more money in the Social Security system. So again, that's 6.2% of your W-2 wages up to a limit now in 2024 of $168,000. Once that limit is reached, if you make above that on an annual basis, then your paycheck goes up because that Social Security tax drops off. That's tip number 5, so be aware of that. Jamison, what's tip number 6?
Health savings accounts have increased. So married filing joint, 2023 limit is $7,750, and it went up slightly to $8,350.
Perfect. And if you're single, it's a little bit less than half for both of those numbers. Why it's not exactly half, we don't know, but yeah.
Tip is make sure you're maxing that out. Get the extra $500, $600, extra $600.
Absolutely. Now, good news for high income earners with inflation, the federal taxes work on a graded basis. So you get the 10, 12, 22, 24, 32, 35, 37%. And the 35% rate now starts on anything above $487,000. And the 37% rate starts now on anything above $731,200. So there will be a little bit of relief from a tax perspective where it takes a little bit longer for those high rates to be incorporated. If, for example, you're $1 million income earner, you now have a bigger runway before you technically hit the top tax rate.
I think 2023, that top tax rate, married filing joint, $693.
Yeah, it was almost 7. So that's another $30,000 that gets taxed at 2% rate. That's about $600 back in your pocket if you're a high income earner above those limits, just in that top rate. And then there's some relief along the way as well. It's not huge, but a couple grand is something. Yeah. Okay, so let's talk about estate planning. So a lot of our clients gift into trust on an annual basis. A lot of our clients gift into help their kids fund Roth IRAs, help them max out their 401k. So in 2023, there was a $17,000 per year limit that you could gift tax-free. It's unreportable. It doesn't go against your lifetime exemption. So speaking of, what adjustments are now in place for 2024, both on an annual gift exclusion and then a total estate exclusion if someone passes?
So annual went up $1,000 from $17,000 to $18,000. And the big estate exclusion went from, it was just over $13,000.
Yeah, now it's 13.61 million. So,
500.
But that cuts down 2026. That goes in half. That was a Trump tax code that gets taken away in 2026. And those limits have really been discussed with potentially even going lower, depending on who's in office. So, estate planning, if you have a high net worth, and making sure anything above those limits doesn't get taxed at 40%. So using those gifting exclusions, getting stuff into irrevocable trust, titling, et cetera, those all become very, very important conversations. Okay, the next one is annual 529 plans. This goes right along with those gifting exemptions. So now you can do $18,000 per year. So if you're a married spouse and you have a kid, the husband can put in $18,000 a year, the wife can put $18,000 a year. That's $36,000 a year they can put in to the 529 for the kid. And then also you have the 5-year acceleration. You could technically, each spouse could put in $90,000 at once, $180,000 all up front. And then the 10th tip then is the standard deduction increase. So Jamison, tell us about that. Because most people, majority of Americans do take the standard deduction. They don't itemize because of how high the standard deduction is.
Yeah, it was went up slightly. So married filing joint 2023 is like 27 and some change. 2024 would be $29,200. Single tax filer is up to $14,600. So that's just basic deduction you get off your income if you do not itemize your deductions.
Excellent. Well, if you're an EWA client, please expect us to reach out. We're going to make sure your financial plan fully takes advantage of all of these limits, tax projections on what your income cash flow is going to look like with the tax changes, inflation adjustments. So we will be in touch soon. And if you're not an EWA client, if you have any questions, feel free to reach out to us. Thanks for joining. Thanks for tuning in to our podcast. Hopefully you found this helpful. Really hope this is as beneficial and impactful to as many people across the nation as possible. So hit the follow button. Make sure to rate the podcast, and please share with any friends or family members that would also find this beneficial. Thank you very much.